We used to call it Goldilocks, or it's been called in the past the Goldilocks scenario, where you have a soft landing. So in investors' mind, even though I think we're headed for a hard landing, in investors' minds, the data will support a view of a soft landing for probably several more months, at least a few more months. And that will help bring rates down because it's soft. The economy is soft. That will help bring inflation down. I know that the Fed's very worried that tariffs are going to push inflation up, et cetera. I don't think you're going to see much of an uptick in inflation. And when you look through the numbers, I think you'll see plenty of reasons, particularly in the housing area, to continue to say it looks like inflation's trending towards their target. So you'll have that, and the companies have continued to show resilience in terms of managing their earnings. Quarter to quarter to quarter, everybody keeps thinking, "Oh, this is the quarter we're going to get disappointed," and they play the game of obviously, if they're going to have to lower numbers, they lower them ahead of time, and then when they report, they're in line or above expectations typically. So that's part of it. But generally, our companies, particularly in the tech sector, have been very resilient. All the doom and gloomers out there that were calling for big earnings adjustments downward have been disappointed. You haven't gotten that. You still have forecasters out there calling for lower S&P numbers, et cetera. But generally, I think earnings are going to hold together pretty good. Not that they're going to skyrocket here because the economy is softening, but I think the companies have a control over costs and are going to continue to report inline numbers, with some surprising on the upside, of course. So you got all of that, and it supports the stock market, obviously the bond market, given my scenario, and the metals market. So yeah, it seems like we're in a sweet spot where they can all go up. Now, the funny thing is people have in their mind that metals only go against stock market. So the stock market has to go down to get, metals up, or at the very least, stock market can't be doing much because the metals don't do well in bull market. So that's not really true. You go back to the first decade of this century, and there were periods where they both did very well. There were periods when they didn't, but there were periods. So sometimes the metals move with the markets, and sometimes they go against them. In this final melt-up phase, yes, I think you're going to have both metals and equities going up together. And by the way, it's funny because people, they hear the big picture, but then they want to see it every day. And that's you could have a situation where the metal, we've kind of had it in the last few months, where the metals move up big on days when the stock market pulls back. But when the dust settles and you look through the months or the quarter, both moved up a lot. So it doesn't mean that they both move up every single day together. It's just, in general, you're going to see over the course of the summer and into the fall, I think, both the equity markets and the metals markets move up together.
Okay. So yeah, I think that makes sense with how you're laying it out. And let's maybe touch a little bit. We didn't talk yet about gold and silver and commodities, but sounds like you're very bullish on those as well. You recently raised your target on gold to 4,000, I believe, pre-bust.
Yep.
Silver is still 70, is that right?
75. Yeah, my
Okay.
75 target on silver has been there for quite a while. And when I raised gold, I actually raised gold twice in the time that silver stayed at 75. So silver still got a long ways to go to get to its target, whereas gold has gotten, my original target was 3,000. I raised that to 3,400 maybe a year ago or last summer. I can't remember exactly, and then raised it to 4,000 in April. So, my belief is, and actually, if you step back, everybody thinks silver is disappointed, but from the lows of a couple of years ago, both gold and silver pretty much tracked along together. So both are basically doubles off of those lows. It's just that silver typically outperforms in a bull market, and it hasn't done that yet. I think that's about to change, or is in the process of changing now, where you're going to see silver outperform gold. they'll both do well. Gold is, going to 4,000 from 3,400 is a pretty good run, but silver going from say 37 to 75 is a lot bigger run. So I think that's what I think the next 3 to 6 months is going to look like.
Yeah, that absolutely is an outperformance on the part of silver. I've tried to think about it in the past, and I haven't really settled on a reason in terms of why silver typically outperforms. Is it the fact that some investors miss getting into gold early and then they see silver as an easier way to do that in the kind of later stage, and that's what drives silver up so, much higher volatility than what gold experiences?
Yeah, it's a couple things. I think silver is poor man's gold. So yes, there's when you get the retail on board and institutions start looking, they'll say, gold looks more extended, so I'm going to start buying into silver because it will track gold or better. So it's somewhat, that poor man's gold alternative, and it's obviously one's at 3,400 and the others at 37, much more affordable to the retail investor. So it's partly that. It's obviously the tape as the momentum goes. People get more speculative, and silver is a more speculative metal. It's also that when you enter that stage where silver really is going, part of that is because there's a higher confidence that things are okay. Gold can play when there's trouble out there. Gold can be both an offensive and a defensive asset. And that's another thing people misunderstand. They only think of gold as a defensive asset, and obviously that's been proven wrong in recent years. But it does, when you've got a situation like the Middle East, it certainly supports gold. Interestingly, though, gold's been kind of waffling here for a little bit, the last week or more, at a time when you have heightened risks in the Middle East. So that's interesting, and that just shows you when something gets overbought or gets in favor too much, even the news can't drive it higher. Sometimes it just needs that pause. The pause can be pretty shallow, but while it's pausing, it kind of rebuilds its, the sentiment gets more negative. It rebuilds its ability to move. The wall worry allows it to move higher later on. So, I think gold's acting great. I'm not worried about this very short term pullback. Silver looks really good. Silver broke out from, at least a couple year period, longer than that probably, to 137 recently. So I think that one's alive and well and ready to run.
Okay, so maybe let's touch then on the leaders in the melt up. It sounds like you're very bullish silver and the gold and silver miners, which have tracked gold but probably not outperformed as much as might be typical. And it also sounded like you're very bullish on the small caps still, as well as tech. So yeah, maybe lay out what you're most bullish on in the melt up.
Yeah, I think you named some of them for sure. I think the miners are, as if my numbers are right on the metals, the miners have a lot of upside ahead, and they do look like they're coming out of very long bases in many cases and just beginning to move up. So I think there's big runs ahead in the miners, and this is just pre-bust. There's going to be even far bigger runs post-bust, and then a big correction during the bust. But we're just talking pre-bust. I've got a target on a long held target in the gold miners of 65 for GDX and 100 for GDXJ, and they're not that far away. I mean, GDXJ is still 35% away or whatever it is, maybe 40%. But GDX got up to 55. It's only $10 from my target that I've had for probably 5 years. So there's room there for those targets to be raised. I haven't done it yet, but I could. Silver miners, my SIL target is 75, still a good ways away, but not that far. It was a lot farther away not that long ago. SILJ is currently 15-ish, and I have a 35 target, so that one's got a good distance to go. But even there, I think, the minor, that shows you what kind of upside I think we have this year from here. So I think miners will be certainly leaders in this, in terms of performance leaders in this last leg. They could keep going beyond the top in the indexes. People, I've made that comment over the years, and people want to pinpoint it. It's not a precise thing. It doesn't have to happen that way. It's just they have farther to go. They're later cycle. So it just stands to reason that you could have the indexes top out, say in September, and the metals, the miners top out, 2 or 3 months later or a month later.